Today, we're breaking down one of the biggest stories in AI hardware and tech stocks, the seismic shift involving Groq and NVIDIA that is now reverberating through Wall Street, Silicon Valley, and across the global AI ecosystem. If you're focused on the future of computing power, chip competition, and market implications for investors, stay tuned because this could reshape how the industry is structured for years to come. Before we dive in, remember to subscribe and hit the bell so you never miss actionable insights on transformative tech companies that are redefining markets. The headline right now is this: NVIDIA and Groq, once viewed as competitors in the AI chip space, are now deeply entangled in a strategic deal that has major implications for both companies and investors in the last 24 hours. The distinction matters in markets because NVIDIA insists the deal is non-exclusive, and that Groq will continue operating independently even as top leadership transitions to NVIDIA. To understand the gravity of this development, we need context on who Groq is and why it matters. Founded in 2016 by former Google engineers who helped develop Google's tensor processing unit architecture, Groq built its reputation on highly specialized chips known as language processing units, or LPUs. Unlike NVIDIA's ubiquitous GPUs, which are designed for both AI training and inference tasks, Groq's chips are optimized for inference, the moment when a trained AI model actually delivers output, answers questions, and performs real-time computations. LPUs promise speed and energy efficiency that traditional GPUs struggle to match, making them highly attractive for large language models and latency-sensitive applications. This positioning won Groq significant investor interest over the last several years, including a major funding round in September 2025 where the company raised $750 million at a valuation of approximately $6.9 billion. Institutional investors such as BlackRock, Neuberger Berman, Samsung, Cisco, and others participated, signaling that Groq was a meaningful player in the AI infrastructure stack. But Groq's journey was never purely about hype. Investors were betting on a significant pain point in the AI industry: the soaring cost and limited supply of compute hardware capable of running inference workloads at scale. While NVIDIA's GPUs dominate the market, some analysts and technologists believe that future AI systems need faster, leaner inference engines to handle real-time tasks in autonomous systems, robotics, edge computing, and high-frequency trading. Groq's technology was designed to address that gap, and its chips are reportedly used by millions of developers and partners worldwide. Now enter the latest development: NVIDIA, the world's leading supplier of AI hardware with a market capitalization in the trillions, and GPUs deployed across most major data centers, has agreed to license Groq's inference tech and onboard Groq's CEO Jonathan Ross, its president Sunny Madra, and other engineering talent. This gives NVIDIA direct access to LPUs differentiated architectures without having to build them in-house from scratch. According to reports, the financial scale of these assets could be valued at roughly $20 billion, making it possibly NVIDIA's largest strategic technological transaction to date. Critically for investors, this is not a simple acqui-hire or nominal licensing deal. NVIDIA's leadership has made clear that the company views specialized chip designs as an essential complement to its GPU dominance, especially as AI models become more sophisticated and the cost of inference becomes a competitive front. The arrangement also appears structured to avoid typical antitrust scrutiny by keeping Groq technically independent while integrating its top talent and technology into NVIDIA's broader hardware ecosystem. So what does this mean for NVIDIA's stock? NVIDIA shares have historically rallied on news of large AI infrastructure deals because the market views expanding technological breadth such as inference capabilities, as reinforcing the company's moat. Following today's announcement, NVIDIA stock experienced a modest dip intraday, but its long-term growth narrative remains intact because investors see NVIDIA expanding its capabilities. Rather than ceding ground to competitors, the stock's valuation reflects optimism about continued dominance in both training and inference markets. For Groq, the story is more nuanced. On one hand, the fact that NVIDIA is taking its tech and top leadership validates Groq's innovations and the strategic value of LPUs. On the other hand, Groq's independent future now hinges on how well the company can continue to operate and innovate with its remaining assets and leadership. Groq Cloud and other segments not included in the licensing deal could become core to its standalone strategy. Investors watching Groq's private stock and potential future rounds will be examining whether this marks a pivot to a new business model or a winding down of its competitive edge. Another element worth covering is Chamath Palihapitiya's connection to Groq. Chamath, a well-known venture capitalist and founder of Social Capital, has previously backed Groq through his firm. He has publicly praised the company's technology for delivering high-performance, cost-effective AI solutions that could disrupt traditional chip paradigms. His involvement brought additional credibility and investor interest to Groq's mission in the early days of its growth. Finally, as an investor or tech enthusiast, the broader lesson here is about how the AI hardware landscape is evolving. We are moving from a world dominated by a single architecture, GPUs, toward a more heterogeneous ecosystem where specialized processors like LPUs, TPUs, and other accelerators coexist. NVIDIA's licensing of Groq's technology demonstrates that even the largest incumbents are willing to incorporate alternative architectures rather than fight them outright. For long-term portfolio strategy, this trend suggests that diversification across compute-focused technologies and AI infrastructure companies may capture value that a GPU-centric thesis alone would miss. If you found this breakdown useful and want more timely, investment-oriented tech insights like this, make sure you subscribe, share this video with your network, and drop a comment with what AI sector stock you'd like us to analyze next.